Good afternoon, traders. This is Christian Promhart, Star Market Trade Group, and this is your end of day market recap for Friday. It is the 18th of August. So another week in the books. We are moving through the month of August with volatility. So anyway, that's a quick little joke for you guys. But I will go over, as usual, on these Friday recap videos, I will go over a little bit about today's themes, and certainly there were some interesting ones for the day. Much more green on the screen today than what we've seen over the last couple of weeks. And then I will also go through the week's performance with you and let you know where there was possibly a couple surprises for the week. There's always, weeks like this where we had another down week. When you review the week, there are a couple things that usually stand out, and I will go over those both on the positive side and on the negative side. First things first, risk disclaimer, please read that. Everything that we're going through in this video is for information purposes only. And then also what I will do is just recap what we're seeing here in the indices. And we do have a weekly bar now, so the week is complete, right? And whenever we're going through and looking at the weekly chart during the week, it's always an incomplete analysis because you don't know how the week is going to finish. But here we are. Here's the S&P, and this is how the weekly bar shaped up in S&P futures. Notice that a couple observations that I see on this chart when we basically just focusing on the last 2 years is number one, I think these kind of weeks that we've seen the last couple weeks of a down move, it really kind of makes you think about just what we've seen so far this year. And basically, we really got off to one heck of a rally in the beginning of this year. We had this little bit of a move down. I would say more than a little bit of a move, but we got off in the beginning of this year very strong, and then we started to pull back in February, and we basically ran its course for about a month. And then since then, we have really kind of charged higher. We went through a period of this year where we went sideways for about a month, right? And then we started to move higher. And then, of course, this month has been a drawdown for the markets. But I would say, one of the surprises I thought this year, remember when we started the year, I thought that there was a good possibility that we could really have a sideways type year, or we made an inside value area for the whole year. But we did break out here, and we continue to go higher. So even though this has been, a tough August for the bulls, we're still above value for the year. So, and we could even come all the way back. This is a little bit bigger picture stuff, but we could even come all the way down to 42.57. And that would be, just kind of retesting the breakout period for the year. So I don't have a crystal ball, of course. I don't know if that's in the cards. I think that this week was a pretty decent washout week, so I wouldn't be surprised if we begin to kind of bounce from there. But when you're looking at the S&P chart we'll move over to the daily chart here. So I mentioned, sorry, let me, I do this all the time. So that's that was a couple of things that, a couple observations. The other observation that I would say is that where we stalled out at the end of July, we did not make it to a new high for this year. So yes, this is a lower high. And it's kind of, we stalled out, I guess you could say, in here. People like to draw trend lines. I don't too much unless they're really obvious, or unless they really kind of show us something. I like to rely on what volume at price is telling me. This way, the support resistance levels are based on statistics rather than me drawing a line on the screen, but everybody's different. I don't like to mess with any of that. And I gave a video last weekend about why I like the value areas versus volume weighted average price, right? VWAP, right? You can mess with that, right? I don't want to mess with that, right? What does that mean? Like you can mess with that. You can anchor the VWAP wherever you want to, so it makes sense to you, right? We don't want to do any of that, right? We want our value areas set based on statistics, volume at price, and not have to do that. So that's, I think, enough observations for the weekly chart. The daily chart, we have a mess on our hands. We have been moving down, and this really kind of accelerated this week. Remember, back to where we were just at the beginning of the week, we saw a little bit of a bounce. I think that took, we received a little bit of a clue last Friday that the VIX was going down with the market, right? That provided a little bit of a bounce, not much, but a little bit of a bounce on Monday. But that was followed by that not holding, and then basically pretty heavy selling Tuesday, Wednesday, and Thursday of this week. And if you play this market to the short side, you were rewarded for that, because we had 3 trending down days for this week, and then today, trying to find some support. So a couple things here. Did we get really oversold here? Well, it depends on how you define oversold. I always get some questions about whether I think that we're oversold. It depends on the time frame that you're looking at, and it depends on what you're looking at, right? For example, one of the things that we use in the trading room, or that I try to point out, is kind of an under the hood indicator, is what the McClellan oscillator looks at. That gives you a sense. So this is, just looking at what the McClellan oscillator looked like for the NIMO, where this got to. Yes, this is an oversold level. You could overlay this, right? I mentioned a few minutes ago about where we corrected, or had a pullback earlier in the year. That was February and March. Notice what happened. We got really oversold. Right, the market recovered there. So this is one gauge of being oversold, and yes, we basically have got there. Right, this is also last year when the market rebounded. Right, we got oversold back in late September, and we bounced from there. Right, and not only did we bounce, but the trend changed and headed back up. Right, and this is what it looks like for the McClellan oscillator for Nasdaq as well. Again, similar theme. Is this as low as the last couple times? Not quite as low, but pretty darn close. So does this mean that we start to move back up after this? There's no guarantees, and I like to look at some of those things, like the McClellan oscillator, in conjunction with other things. What I would be waiting for is for price to recapture some of these shorter term moving averages, right? At the very least, right, the 5-period moving average. I mean, there's been no hesitation here, by the way, right, in terms of once we started to break this in the beginning of the month. Right, the market was not able to retake this. There's a couple tests here on these 2 green bars, but this is why I have the moving average, these types of moving averages on my chart, because they give me a sense of whether or not really the buyers or the sellers are in control of this market, and if and what direction we're trending in. And right now we're trending down. So yes, today could be the start of a move, back to the upside, even though we finished down on the day in here in S&P futures. So you just kind of have to let that play out, right? And again, I'm just kind of going over some of the things that have helped me. I never want to try to pick a bottom, right? These days, like we had today, are more, for my opinion, day trading than anything else, right? Until the trend reestablishes itself. So everything that I talk about, of course, in my end of day videos, is really in relation to the trend and where we're seeing support and resistance. I've just learned that trend trading is the best thing for me. May not be the best thing for you. There's all different types of trading systems out there, but for me, I generally wait until we get priced back above the 5-period moving average. And the best thing that I could kind of tell you for this is, I don't bring this example up very frequently, but this was obviously what happened to the price action during the COVID times. And, everybody tried to pick the lows in this. And of course, this was a very extreme situation. This is not what we have going on right now. But once the price got above the 5-period moving average, the trend changed, right? And it really kind of changed for good there. So again, something as simple as that really helped you to stay out of a lot of the pain. Now, when this first happened, right, and this is what happens to me in my trading, is that on the first kind of spill of it, I generally have positions on, and I get stopped out in positions. I remember back in here kind of trying to reestablish a couple things and then getting stopped out again. And then basically just waiting is what I did through this time, and started to kind of reestablish longs in here. So going back to where we are now, Now that's kind of happened to me as well as we've gone down, right? Getting stopped out in numerous trades. I actually got stopped out today in a trade that I put on yesterday. So these types of things happen. They're frustrating. I just wanted to talk a little bit about the psychological dealings of this. If you have gotten to the point where you are frustrated with this price action, this is what happens in trading. Right? Trading is not easy, right? There are very difficult times when we are correcting like this if you're playing most things on the long side, right? But eventually there are better times. But going back to the P word, you have to be patient in trading, and you've got to wait for these things to play out and really try not to have drawdowns as much as this market is correcting like this. That's the whole name of the game. Right. It sounds so much simpler, but there could be a lot of false signals, right? Just as Monday looked like we could have possibly turned here. We didn't, right? Even though that there were some really positive things, I think that occurred on Monday by price staying inside the value area. But so finally, just to wrap up this segment of the video, we are below value and we are trending lower. It will remain to be seen if we can build from this little reversal that we saw from the lows today. Right. And also notice we did not close on the highs today. So it's almost like this to me in the S&P futures looks like a doji. This is a little bit different when you look at SPY. It's a little bit better looking. There was a VPOC that was that we're trying to get back to. Right. Those things, these things like the divergent point of controls will basically, give me a sense of whether or not areas where buyers could come back in. And you'll notice that we did go further down, and that often happens, but we're being supported here a little bit, right? And even, I thought this was look at the Qs today, right? So doing this backwards, so we should probably do this the right way here. But here's the same, going through the same analysis. I promise I won't spend as much time here on the Qs, but it's the same thing. We're still way above the value area, the top of value. So we're still trending up. We have corrected back down here, right? And that's it. Right? Let's not debate whether there's a bull market or a bear market. For now, we're still in uptrends. We're in uptrends on the daily chart. We're in an uptrend on the weekly chart. So we sliced through this virgin point of control, no problem. There was no buyers that were kind of willing to step in here where there was previously a lot of volume. The selling pressure won out there. Right? This particular one down here, notice there's another one down here. So I would be mindful. We would want to see, right? You could begin to kind of now look at what the value area is, the shape is going to be for next week. Going to want to see price get into that value area for the week, right? That's 360.60, right? And then we may be on to something more powerful. But if we come up here and we fail, then it's stay defensive in terms of how much risk that you are taking right now. So again, this is nothing to hang your hat on, in my opinion, right? There's nothing to really get excited about. It's something that we can maybe build from. But again, look at how far the price is from these moving averages. All right, and then finally IWM, and then we'll go through bonds next. IWM, I made mention of this in yesterday's video, that there was 2 virgin point of controls taken out. There was this one, right? And by the way, if you're not familiar with what a virgin point of control is, you could go to my pinned tweet, and I have a document that describes what a virgin point of control is, as well as volume at price and the value areas. But notice that we did find some stabilization here, and the small caps actually outperformed for the day, right? They actually had a pretty decent day today, up about 0.5%. Keep in mind that they started the day in the red. They weren't down as much as the S&P or the Qs, and they showed some nice relative strength just for today, right? Just for today. Right. And this was something that I played in the trading room today. I went long the levered small cap ETF, and that worked out quite nicely for me. Even though, like I mentioned earlier in this video, that I did get stopped out actually in 2 swing trades today. So that day trade balanced things out a bit for me. But again, we're very sideways here for IWM. So it's tough to really get excited on for a sideways chart, but maybe we hold in here and begin to start to make our way back up, and we did hold the 200-day moving average, which I also think is a positive. We're still below value, obviously, for the month, and we're below all those moving averages. What about bonds today? Well, bonds actually had an update today, right? So TLT, after being down for the majority of this week, caught a little bit of what I think was a kind of risk off type bid. Remember how, like, bonds are funny that way, right? We've seen yields go higher all week long, but eventually when the market gets really spooked, right, what happens is that bonds can act as a flight to safety. Since I showed that example earlier about what happened during the COVID times, I think if you were trading during that time, the bonds went ballistic to the upside, right, as kind of a risk off situation was unfolding. When everything was being shut down, there was a huge move into bonds to safety. So if things continue, if we start to hear more worries globally about things like China, right, you might see bonds continue to move higher. And I want to get to the weekly chart here because, could we have a double bottom here? It's definitely possible in bonds, but we won't know that until until afterwards, until we start to bounce, right? And this is, technical trading 101. Just because something comes down and tests previous support, you don't know if you have a double bottom until you start to make your way back up. And then you could say, hey, there's a double bottom on this chart, right? But that remains to be seen. But I do find it interesting that for now we are holding that 93.42, and I think that this will be a must watch, right? If bonds break the support, right, and they start to head lower, right, then we probably have more problems on our hands, because again, this is a headwind for equities when interest rates go higher. What about the dollar? Well, yesterday, again, going back, if you watched yesterday's video, you know that I talked about a virgin point of control being taken out. It's a little bit too soon to see if we're going to get a reversal off of that, right? We are still, just like I went over some of the things that are trending down, this is trending up, and it's above all these short-term moving averages. But if this starts to break and go lower, also, this would be a positive for stocks. All right. So I think it's a good sign that price that is not getting over this virgin point of control from back in here. And we'll have to see if that ends up being a area where sellers start to come in and take profits in their dollar longs. All right. So very important. Anything else that I wanted? So again, nice bounce today. We don't know if it's the making of a bigger bounce yet. We'll have to watch some of the technicals and some of the indicators as well. And interesting, the oil stocks were strong today. Right? You look at some of these charts, like XLE, looks pretty good. Does it look awesome? No, I wouldn't say this is an awesome looking chart, right? It did come back in and check the 5-period moving average, right? Energy, crude. Remember, we talked about crude last week when everybody was getting really bullish about it. I mentioned that crude hit some resistance, right? There's your resistance point, 84.67. And we have not broken in there. So keep in mind, that could be it for a little while for crude. Where I would be wrong, or where I would change my view, is if crude gets above that 84.67 level and into the value area for the year. Now, I am long some energy stocks, full disclosure. So just because crude doesn't blast off to the upside, it doesn't mean energy stocks aren't going to work. All right, and then just finally, the week's performance, as I always like to review. There's a couple things that stood out to me this week. Right, so first of all, what was pretty strong was the diamonds. Let's see if I can just bring this up here for a second, right? And if we look at the month to date so far, S&P is down 4.6%. Underperforming, even though the small caps outperformed today, they're down 7% for the month. Qs are down 6.66. Ooh, spooky. And emerging markets and international markets are also down pretty decently. EM is down 8.5%. The Dow is only down 2.8%. Most of the losses stemming from this week. All right, so that's what was a little bit of a disappointment this week, to see them actually underperform SPY by just a little bit for the week. All right, going back to sectors, right? Steel and metals and mining were strong. Obviously, there was a deal that could be in play with U.S. Steel that drove a lot of the performance, that provided what we call pin action to a lot of other names that that got a bump from that announcement. One of the things that stood out to me was that the semiconductors, right, with the Qs down 2.8% this week, the semis actually did okay. Now, again, you look at the chart, and I'm certainly not sold on the chart right now. I think it needs more work, more confirmation, but for now, it was a flat week for where the semis were. Right here's where we started. We went up, and then we went down for a couple days, and then we rebounded a little bit. All right, so one other thing that stood out to me is that we're not really seeing a rush into to more defensive areas of the market. For example, consumer staples, where are they on this? Consumer staples, XLP. I don't even see XLP on the list. So maybe it just wasn't a big up or big down week. But if you look at the chart of consumer staples, right? We're not seeing a big movement into the consumer staples as a risk off type place, right? And like things like that I normally look at when the market is underperforming like this is like, oh, like Pepsi's are usually a pretty good stock to be in. Not this week. That broke the 200-day moving average, right? So there isn't this mad rush into things like consumer staples, utilities, and usually the risk off nature overwhelms the other factor that people don't want to be in these because of higher interest rates. So that's my opinion. I would watch some of these things to see if there is more volatility next week. Perhaps you might see a little bit of outperformance in some of these, but as of now, you can't hide in these places either right now in the market, because some of them went down, just as much as some of the other riskier areas of the market. So that was also something that was revealing to me. All right, guys, I'm going to, and here's of course international performance as well, but I don't want to make this video any longer than it is. There's the performance for the week, and we'll see what how we get going for next week. We do have a couple big events to watch for next week. Powell speaks, but that's later in the week. I believe that's on Friday. The Jackson Hole meeting's Thursday and Friday. I think he speaks on Friday. And then we also have NVIDIA earnings, which are after the close on Wednesday. All right, guys, have a great weekend. Thanks for watching the video. And if you like the content in these videos, please make sure you like the video and subscribe to my YouTube channel. Thanks very much.